Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 210. Today is November 14th. My name is Cyprian Francis, and joining me, as always, head honcho, top guru, main man, top dog, AJ Brown. Good morning, AJ.
Hey, Sip. Word of the day, volatility.
Volatility. And as I was prepping for today's show, I was kind of looking at where we are at, these levels. And one thing came to mind was these like gaps. I mean, we're having like these huge gaps in the morning, and then we were down 500 points on the Dow to start the day, and we're rallying. Obviously we're pulling back from some of these highs, but what are you seeing to get the week started? Risk on, is that the theme?
Well, it was risk on until yesterday, then it was risk off. So risk on because all the news around the government shutdown ending, right? So as of Sunday evening, the one group was saying that we're going to end the shutdown. The Democrats jumped on board. Then Monday, Tuesday, they're bringing in their, procedural stuff. Will the airport start working again? Well, it's a slow process, isn't it? So the government is not something that the government is not a little tugboat. The government is a big, giant freighter. And so to turn it from this direction and get it to go this direction isn't a fast process. To be able to start getting that economic news again, I mean, Caroline Levitt, the spokesman for the White House, was like, yeah, you're not going to get any data for about a month, right? So not only have we been flying blind since the government shutdown started, but we're going to continue to fly blind for at least another month. And so the news kind of sunk in that even though we've got the government reopening at some point here, that we're going to be flying blind. And what has the Fed been saying for the last 3 weeks? They're like, when we get into a situation where it's extra foggy, where we really don't know what's happening, we're just going to slow down in our decision making. We're going to go from 60 miles per hour down to 25 miles per hour, because that's what you do when all of a sudden it gets dark out and it gets foggy out. You slow the car down, which means they don't want to make any decisions one way or another. So that's starting to sink in as of yesterday, that probably the Fed's not going to take any decisions on policy change in December, right around the corner, maybe 3 weeks, 4 weeks from now. They're not going to do anything, or that's what it looks like. Can I bring up the picture, Sip, of what investors believe is going to happen? I don't know if you remember, but a couple of weeks ago, this was almost a given that the Fed was going to drop interest rates by another quarter point. Now it's like 50-50. Are they, aren't they? Well, they've been hinting that they're not. It looks like they should, but nobody knows. And so that's kind of causing, at the end of this week, the news about the government reopening. Great, it's reopening. But now that that's happening, people are focusing on what comes next.
It's like, what are we going to base this next freighter turn on? Is it going to be the drop in employment? Oh, but we don't have employment data. Is it going to
Nope.
be the uptick in inflation? Oh, we don't have
Nope.
inflation data. But there's still this like disconnect between the governors, where the Trump guy, I don't think he's gonna buzz. He still wants his 50 basis points, right?
Yeah,
And
but he's
so
just 1 in like 13, right? And it's so funny. It is so funny. It reminds me of what I just saw in the nursery school, where I dropped off the little one, right? I went in there, and two of them, there was only like 4 seats around the table, but there was 5 of them. And so two of them were trying to sit in the same seat. That's exactly what's happening with these grown-ups at the Federal Open Market Committee. There's 2 people, one person who the court said doesn't have to leave, but they've already brought in another person to replace her. So they're both sitting at the seat, they're both voting, and they're both voting completely opposite, canceling each other out.
And I believe one of the other Fed governors announced his retirement. So there's another seat up for grabs. And so that's basically the storyline of the week is, oh, we might not get our rate cut. The market shouldn't be as exuberant as it has
Yeah.
been, and we've kind of fallen back off of these highs. I don't know if you want to pull up the SPX.
Yeah.
That tends to be kind of our main gauge of where we're sitting from a market perspective. And even in the last episode and the episode before, we were discussing, this could be some sort of a top area to maybe start to look at, using some options and using some protective positions, specifically that VIX trade that we always cover. But
But even all of our premium selling needs to be kicked in right now. If you're not doing premium selling, you are not only setting yourself up with a lot of risky directional trades right now, but you're just not doing what's optimal for being an advanced trader, for being somebody who's actually a passive or an active investor.
And so looking at your SPX, we had some important levels on the last episode. And that's why I brought up the gaps, because these moves are like happening overnight. And then the market a
Mhm.
day session opens and it's like, what are we doing here? Are we breaking?
Mhm.
Are we breaking to the downside? Are we going to find some support here?
I got to point
Even
out
though
a couple of things. So, I'm famous for my retracement analysis here. Here's a couple of things. So, if you take a look at where the end of that uptrend that was all the way since April. So it was like a 7-month uptrend. It ended on October 8th. And then we went into this period. It actually started a few days earlier on September 25th. On September 25th, we started with a new trend that didn't even last until October 10. It was like a 15-day, and we're not even including trading days. We're talking including weekends and holidays. It was like maybe 10 trading days, 11 trading days of trend before it changed again. On October 8th, we got another one. And this one lasted a little bit longer. It actually just barely matured when it changed again. So now we're in yet a new trend. This one hasn't matured yet. Um, that, as of yesterday, this new trend was identified. It started just a few days ago, October 28th, right before the end of October. And we've been in that trend now, and we're waiting to see what happens. But if you start seeing these trend changes, right? We didn't have a trend change for like 7 months. And now in the last month and a half, we've had four trend changes. That's telling you that the market is now in a place where you need to be doing some sort of sideways, you know, strategy. And my favorite one is the premium selling strategy that we do here at Trading Trainer. But any sort of strategy that profits on high implied volatilities, high anxiety in the market, and sideways range bound price action, you need to be using that right now. I mean, our program SIP, and I'm just thinking about this because we met. By the way, a lot of people are like, AJ, how do I do what you do? I got to say, you're never going to be as good as me. I'm the GOAT, right? I'm the one who's been doing this since 1997, making it professional since 2003. So, and if you follow any of my subscribers, you're never going to do as good as them because they've been learning from me, right? But with all that said, that's my disclaimer aside. You can follow what I'm doing, but you're never going to do as good as I am. But the point is that we were in this program, and the key is right. You're going to go into the program. You're going to put on your VIX trade right before you put it on. You're going to send it to us because we do trade reviews. We're going to make sure you're using the right strike prices, and you're going to get your VIX on. And then you're just going to go to our screeners, right? You're going to pick the ticker. You're going to bring it to a workshop, and we're going to help you make sure it's the right ticker. You're going to put it into one of our tools that tells you, you're going to put in some specific details to your portfolio, like how much portfolio you got and what sort of risk, appetite you are. And it's going to give you a trade plan. And if you want to, before you actually trade it, or if you want to paper trade it, send it to us for another trade review. Make sure that you're doing the right thing. And then in the first 7 days, put one of these premium selling trades on, right? Because this is what's profiting right now. Your directional trades are going to be very risky. The probability of success has dropped in just the last 2 weeks. You need to be doing this premium stuff, right? That's what we do in our program all the time. I can't emphasize that enough. I'm almost like, I want to come to your house and bang on the door and say, stop doing what you have been doing. The market has changed personalities. It's clear now, if you look at these charts, and just start doing some options premium selling.
It's like the
I'm
fog
almost mad
is
about it. I'm almost
it's
mad
like
about it that people aren't doing it.
well, that's why we broadcast every Friday, but it's almost as if the fog has gotten so foggy that the direction up or down really doesn't make sense. And so
No.
we're going to kind of find this chop, which is great for the, options investors because
Peop
like you mentioned, those watch list names aren't always to the upside. Some of them are to the downside. Some of them are earnings plays. Some of them are just time decay, right? That's the beauty of options.
The scoop is right. That's exactly what the directional trades that people actually told me when I was checking in with them a couple months ago. Hey man, I'm not doing as much premium selling because it's just so easy to make money directionally. And when the market is trending, sure, I get it, right? You don't want to, do the extra thought process behind doing premium selling. But the scoop is when directions start to get inconclusive, the probability that your guess on direction isn't going to be 100%, then what can you do? Well, people forget that options profit on time passing by if you use them correctly. If you're selling premium, that's how they work. So right now, the most reliable investment you can do is make money on time passing by. So why are you so stickler and trying to do directional trades? And the worst right now would be if you're trying to do directional trades and using leveraged options, right? Because leveraged options, if you get it right, they make you, 3 times up to 10 times the amount that you would have made on the underlying symbol move. But if you get it wrong, which the probability just in the last 2 weeks has shot through the roof of you getting that direction wrong, if you get that wrong and you're leveraging an option, that's 3 times, even up to 10 times the loss. So switch gears. Start profiting on the time passing by, right? And make sure you've got that VIX hedging trade in place every time the market tells you to put one in place. Don't delay.
Yeah, and we can review the VIX in a moment, but I do want to get your input on the rainbow charts, as some viewers like to
Yes.
call it, because I do see us breaking all the way down to this green area, at least to
Yes.
start the day or in today's session. But for you, you're waiting for the close really to kind of determine what has happened. So, given kind of your analysis from last week and where we are today, what are you seeing? And how do we describe this to any of our new viewers who might be looking at these colors and thinking green has got to be buy, right? Green has got to be a buy territory. Am I wrong?
Well, let's start off with what happened yesterday. So we were bounced. Okay. We had this trend, right, that started back here. What's this date? This was on October 8th. We had this new trend and it actually matured on us. What does that mean? That means that we got a minimum of 2 tests of resistance and we got a minimum of 2 tests of support. In order to define support resistance, you need to have at least a beginning and an end of your line, right? So as soon as we identified that, we're like, great, we have a mature trend. So then we're like, let's continue with this move. So we started with this move right here. And instead of going above 6,890 like it should have, or even better, going above this level over here, let me go ahead and compress my chart a little bit so that we can see what's going on here. Even better for an uptrend, we would have wanted it to go above this 6,931 bucks right there, 6,930. And instead it stopped short. It didn't even make it above the 6,890 before, people were like, oh, all the same stories. Oh, What's the Fed going to do without any news? Oh, is AI overpriced? Oh, all these things that when we're not like distracted by something, they come back to us and we're like, oh, things haven't changed. Magically, they should have changed, but magic doesn't actually work. So, right, they sold off. That ended that trend that we just got maturation to, and it started this new downtrend the minute we didn't get, we didn't get up into the upper red or into the green. So now it's like, are we going to be in a downtrend or are we going to be sideways? Well, today's price action, and I don't know what's going to happen in the afternoon session or in the last hour of trading where everybody reconciles their account for the day, but already we started low. We went lower, like, oh, the news is really bad. And then during this morning session, not only have we come back up, but we're up higher than yesterday's close. This is what we call a key reversal up bar pattern. That means that our low was lower than yesterday, but our close is higher than yesterday. That's kind of a key, pattern that we look for to identify bottoms. But again, the day ain't over. Traders can come back this afternoon or in the last hour of trading and bring us right back down, making a doji bar. I don't know. The things are topsy-turvy. All I know is that all my investments right now are in time passing by, because time passing by trades, who cares whether the market goes up or down? You just need to let the clock tick forward. And that's what I'm doing, because that's how I'm going to be making money while, the insanity ensues. But you're right, Sip. Up, down, green would mean that we're going to be into a new downtrend, but I don't think we're going there right now. But yeah, things are changing. Just in the last month and a half, things have changed 4 different times. So you gotta revert back to what's working, and what's working is watching the clock tick down and making money on premium sold, right?
Yeah, it feels like the lack of economic data actually has a tremendous impact on the follow through if we were going to go to the upside more, because the earnings seem to be coming in for the most part positively. But as this market is pulling to the downside, as we looked at last week, the VIX is moving to the upside. However, you are not, like, you are either in the position or you aren't. So is your stance on the VIX where you're kind of waiting for your next signal to show up?
Yeah, the signal showed up on Tuesday. So the people who missed the previous signal, that was in the end of October, beginning of November, they were like, I missed the signal. I have to put on the VIX hedging trade next time. Well, they got an opportunity on Monday and Tuesday to do just that. So I know a lot of people threw that on Monday and Tuesday. Right now, as of Friday, it's a little bit late again. Now is the time to be looking at, should I be taking profit? Should I, is this trade working for me? And the answer is leave the trade on, and it's going to protect you. It's better to have it on as a protection trade than to just try to trade it as a profit center. But yeah, there's been opportunities. If you download our free indicators, which everybody should do, let's go ahead and throw one of these indicators on right now. If you're using it on the VIX, so this is my fast MACD indicator. You're going to have to, because the VIX doesn't have a good volume measurement, you're not going to calculate it on VWAP like we would with a stock. You're going to calculate it on close. Got it set for close, and make sure it's the fast MACD settings, which are 6, 19, and 3. Put those in there, and then look for your signals. I didn't turn it on. I actually just made sure it was set correctly, but let me make it visible here on my chart. Yeah, see, you get these little signals, and it tells you when to go ahead and put the VIX trade on.
Wonderful. I did have a tweet that kind of touches on some of this AI bubble that I'd love to run by and get your perspective on, AJ.
Yeah, let's do it.
Because are you a buyer of this AI bubble concept?
Yeah, just because, and there's nothing really tangible to tell you whether it's if AI is overbought or oversold. I always tell my program participants, guys, listen up here. leading indicators should not be buy or sell signals, right? And that's what people, you hear the talking heads talking about this. Right now, the AI bubble is a leading indicator saying that AI is overbought. I've seen things stay overbought literally for years, right? That's why we don't use leading indicators as trading signals. What leading indicators tell us to do is to then look at lagging indicators for trading signals. And the trading signal right now would be to go ahead and short all the big AI bubble plays in order to make money on the bubble bursting. However, none of those lagging indicators have confirmed, right? So all we're left with is a leading indicator. So, and you hear about some of these big guys out there, the guy from The Big Short who's already shorting the AI bubble. Good for him. That's not how disciplined traders go, right? He's kind of jumping the gun. And like I said, a leading indicator can stay leading. I've seen them stay leading literally years. So we're just perking up our ears, knowing that patterns have shown themselves over and over in the past that when something becomes extremely overbought, that a lot of times the bubble bursts. But we're going to wait and we're going to be, it kind of means we're, instead of just like reclined back, we're going to be on point looking for that lagging indicator to say, hey, the bubble's bursting, jump on board by shorting the bubble bursting. But until that happens, we just have to have our senses perked up. Okay, Sip?
Yeah, and you brought up Michael Burry, and that was kind of one of the triggers to the pullback last week, where he basically came out and said, "Hey, I'm going to put on a bunch of these short AI companies." And then this week basically closes the fund, right? I don't know if you saw that, but he closes the fund as kind of like his last final public move. But in that, I did see some stats that did catch my attention, and one of them basically being the Palantir trading at 449 times earnings as being the basis of the trade. And I mean, is there a case for a company that's trading at 440 times earnings not being able to sustain that over whatever the bet is? I mean, I saw that and I was like, wow, that is actually not a bad trade if you have the cash to kind of wait it long time, or over time. And he did this using options, right? And so he's trying to benefit from the leverage to the short side. So I don't know. What are your thoughts on just, a company trading at 449 times earnings? Is that enough of a basis to kind of maybe take a short position over time? Or as you mentioned, it could stay at 449 times earnings for the next 5 years and it not even matter.
Yeah. Yeah. So, I mean, realistically, if a company is not earning money, right? And you're just investing in the company for the potential or the hype that it may earn money. I mean, that is textbook.com boom.com bust, right? That's exactly what happened in the 2000s when all these companies that were on the internet bubble were supposed to be making something at some point, and then they forgot about that and they were just thinking short term. And finally it started to be like, hey, are you guys ever going to make a profit? Because I've invested in you and I would like to get my investment dollars back. It's been a while. So, but it lasted years, right? And there was we're, all of that stuff is leading indicators, meaning that, hey, things are overbought, but we still need to and we want to wait for some sort of lagging indicator. And you can actually, with conditional trades, and every broker's platform I know, even having some sort of basic conditional trades, you can program those lagging indicators into your trades, right? So you can have a handful of trades ready to go automatically on a lagging indicator confirming. And that's what I recommend people do. But I don't recommend people, basically, this gentleman is creating his own hype by publishing his trades that he's shorting the market. He's trying to be the lagging indicator. But go back and look at Michael Burr's history. He did win a few times, but if you look at his win ratio, his win ratio isn't the best. It's just that the times that he did win, he won big. But I think that, and out of the last 11 times that he said something was going to happen, like 4 of them worked, and the other 7 of them did not. So I'm not sure that you want to just trust, one of these talking heads. I think you need to use your own knowledge, which is what I teach people every day.
Yeah, I just some of those numbers just shocked me. All right, as you mentioned, a lot of those goodies, the indicator, learning, how to the free workshop where you kind of learn the basis of premium selling.
Sure.
We just threw the link to that in the chat, so for everybody watching, head on over there and get access to the indicator and get access to the community. So just wanted to remind everybody of that. And we do have a morning sip topic of the day. We kind of try and sometimes get away from the financial world and investing. So let me go ahead and get that queued up here.
Yep.
Now it's time for your morning sip, your weekly dose of pop culture.
Primed up well for our topic today with the New York accent. But AJ, a couple episodes ago, we talked about the Optimus Prime, like robot AI entering people's homes and whatnot. I know here in California, I see a lot of Waymos, the self-driving cars. Also, there's a company called Serve Robotics that does a lot of the robo deliveries in these little like lunch boxes on wheels. I don't know if you guys have that on the East Coast yet, but we have
not where I live.
There's actually 2 companies here in LA that are doing it. However, there's a video going viral on the internet of essentially fast food joints replacing their cashiers with virtual assistants from the Philippines that will take their orders now in order to save on the increases in minimum wage for workers in this industry. And so I guess my question to you, AJ, is have you ordered yet from an AI powered kiosk of any sort? Because I actually have, and it wasn't a bad experience. It was actually pretty pleasant. So have you seen this in any of the stuff that out on the East Coast as you're out and about?
No, but at the same time, I don't get out and about. I stay in my house. But it's interesting because it wasn't that long. I mean, it was a while ago that, and I'm thinking 15 years ago, that when you started to go to the drive-throughs of some of these fast food restaurants, you weren't talking to anybody in the building. You were talking to somebody at a call center, hundreds, if not thousands of miles away. And then they would place the order, and the only people left inside the restaurant were like fulfillers. And so I think that this just takes it to the next level. This makes a kiosk. This makes it so that you probably are now talking to an AI, and there's probably one person behind the scenes at an AI call center, managing the AIs that are probably talking. I'm sure there's one person to 10. Now they're really just like getting, now instead of having the people in the call center taking orders, it's the AIs taking orders, and they've got now one manager making sure that everything's working. And I'm sure that the experience is nice. When you're dealing with somebody who's in a call center taking your order, they could be having a bad day. AIs don't have bad days. They're nice all the time. They may, ask you how you're doing, and that always makes people feel good. So I'm all for it, right?
I agree. Do you think there's any like economic ramifications in terms of like the sector? Because a big storyline in California and LA is they've hiked up the minimum wage to the highest in the country. And so a lot of restaurant chains are slowly losing money and going out of business because the government is forcing these wages. And then I see something like this and I'm like, oh, well, the company is always going to find a way to innovate and overcome any of
Well,
these regulatory mandates.
that's
And
called capitalism, isn't it?
right. And so at what point will the government learn that you can't really control the fair market price of employees and whatnot, because capitalism is always going to try and find a way to prevail. And this could be a big knock to the service sector. And I guess the goal would be, hey, find a way to manage these robots instead of being replaced by one.
Yeah. And that's I mean, this is a very philosophical conversation for our morning sip, but the scoop is as you get more efficient, which is what capitalism is all about. It's about how do you squeeze out more dollars of profit for increase the amount coming in, decrease the amount going out, right? Whether that's in labor or capital expenditures or any of that good stuff. So, the big question is okay, if you increase efficiency and you make it possible for these companies to have more profit, and on the bottom line of GDP goes up because of AI efficiencies. What people are also following is, okay, if GDP is up, what about the mean salary of people? And if there's this disjunct, which basically means, the companies or the individuals who represent the companies are getting all this additional profit and your overall population is going down, that's exactly what spells revolution, right? So you got to watch out as a country that you don't let capitalism go completely unfettered like that, because then you get a revolution and then you don't have capitalism anymore. You have whatever government gets installed. So a lot of times what governments do is they then start to make sure that they somehow figure out a way to redistribute the wealth. I mean, Nixon was the first one almost 50 years ago who was talking about, if we get all these productivity things, what we need to do is start giving everybody just a certain amount of money to live on, right? And if they want to go work for somebody and make more money in addition to that, great. If they don't and they want to pursue the arts and cultures, great. They have their basic needs taken care of. So, that's might be what it comes to if all of a sudden the AI revolution is as big as people talk about it.
Yeah, I mean, I believe it. And any advice I give to my business owner friends, or young parents with children, is essentially, you got to find a way to embrace the AI into whatever it is that you're passionate about: music, science, math, whatever, engineering. Like, the things are at your fingertips now. And so if you get left in the dust, it's essentially your lack of wanting to embrace it. And this is across all age groups, right? I love meeting older people who are a little bit afraid of AI, and then you kind of showing them like, oh, did you know that you can do this, or this makes your life easier, et cetera, et cetera. So every week we're going to continue to see new things popping up, just because this is moving way faster than anything I've ever seen,
true.
in my lifetime. All right, cool. Morning sip out the way. We're going to take a break here. AJ, when we get back, let's run through our pick of the week from last week, because I know that was a great setup. That'll roll into our pick of the week of this week. We've got our speed round. We're streaming live. If any of you guys out there in the ecosphere have any questions, feel free to throw it in the chat. Otherwise, we're going to take a break. We'll be back. Sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
AJ, you're like the webinar king this week, right?
I feel like it.
just getting in wherever the demand is there. I think you have a webinar later today, or was that
Yeah,
earlier today?
yeah, no, I'm gonna be on the Metastock. I think I'm actually one of the last folks. They've been going for 4 days with 4 different gurus. I actually logged in yesterday at noon to get one of the tidbits that I learned from. But yeah, they've been going with different traders and different expertise, and I'm on at 3 o'clock today,
Yeah,
three
so
o'clock Eastern.
shout out to Metastock for that. Head on over
Absolutely.
to I guess just check your email because we'll be sending some links out to how you can get that in your email. All right. Pick of the week from last week. We had a potential setup in Citigroup. Did
Mhm.
we get this triggered? What are you seeing from your end?
So I got an end of day signal last week, and that's what I was talking about. If you're part of my program, you know that with the end of day signals, we always look for follow through. Well, we didn't get that follow through. On the subsequent day, we didn't get the follow through. We didn't get the follow through. We didn't get the follow through. And then our signal was reversed yesterday or 2 days ago, only to give us a signal again yesterday. So we were doing the same trade that we would have done last week. We've been looking for follow through today. It hasn't materialized yet, but again, we still have all afternoon and the last hour of trading, which we call professional hour. As soon as we get follow through, I mean, that's how it works with end of day trading, right? You get a signal in the evening after the market's closed. You do some conditional trading. I usually set it up in that evening for the next trading day. Basically, conditional trading is you letting your trading platform evaluate one or two things that makes sure that the signal you saw the night before is following through, right? And so then you come back the next evening and you see if any of those conditional trades popped. And if they didn't pop, you ask yourself, well, should I set it up again for tomorrow or should I nix it? And so that's why we use these end of day signals. If we get an end of day signal that says nix it, we stop setting it up for each day. Until we get that, we don't stop setting it up. We set it up each evening and see if it pops the next day. So yesterday we got a new signal that said start setting it up again. Today we've got it set up. So far it hasn't popped for us. So that's just it. You spend a couple of minutes in the evening and then you let the trading happen during the day while you go do whatever you do best. And that's what I do.
All right, Citigroup still in play. Wait and hold until we get that follow through, which rolls us into a similar name, similar industry for this week's pick of the week, and that is Bank of America, ticker symbol BAC. Are you seeing a similar setup?
Absolutely. So, this banking sector, by the way, for premium sellers has been profiting for about the last 4 months. And so, it's kind of been a move because over the summer and at the end of, this past spring, late spring, it was a lot of tried and true retailers like Bath and Body Works and Bed Bath and Beyond. Well, it's kind of changed this autumn. It's now more like banking plays. And so Bank of America is right in the same thing as Citigroup. What I like about Bank of America, different than Citigroup, is the underlying symbol's a lot cheaper. So with Citigroup last week, we actually had to not only think about our usual premium trade, but that could have priced a few investors, unless you have a bigger portfolio, out because it got a little bit too expensive. So we were talking also about bare vertical spreads, which have their place. The problem with vertical spreads is that risk is infinite. Risk is the whole invested amount. So you can't size them very big despite being able to. I should replace my language, Sip. You can do whatever you want. But if you want it to be smart, you don't size these things bigger than the amount that you're willing to lose, because a vertical spread, I've seen so many people lose, marriages, and you lose houses to foreclosure because of vertical spreads. So you have to be very careful. It's not my favorite strategy unless you have no alternative, and then you have to play by the rules of risk management. But the scoop here with Bank of America is lower priced. The barriers to entry to do it the way we like to do it, where we leg into premium selling trades, collar those positions, totally there. So we're just waiting, and it looks like I'm watching just as I've been like on my like soapbox here, being the goat of disciplined options trading, right? I've watched, and who knows, we may get some good follow through this afternoon, and we may want to go ahead and short some Bank of America. If you don't want to short Bank of America, either because shorting isn't your thing or you don't have a margin account, you would need to have a margin account to short. I picked out a substitute option. Can I show this options lookup tool, Sip?
That hey, it's making progress every week.
Well, and that's the reason why I wanna show it. My developer and I talked, yesterday morning at 6 a.m., and he's like, "Oh, by the way, check out these latest updates on the options lookup tool. I want you to use this for a couple weeks before we give it to the masses because, I've added a lot of functionality." Like, check this out. He put in a screener for liquidity. Open interest and volume on options used to be a really reliable way to get an idea of how liquid it is. But now, with a whole bunch of dark money, with a lot of options trading happening that's not as visible, open interest and volume haven't been as accurate for us to know if something's liquid. So we go back to the gold standard, which is look at the bid ask spread. And I like to normalize that, come up with a fraction so I can compare apples to orange. And he put it into my freaking tool. So check this out. I can come over here. Let me look for, seeing if an option might be liquid. Uh, you know, you just look at this percentage where it says normal spread. If this number is under 10%, it's liquid. If it's over 10%, it's not liquid. All of a sudden, I don't have to do all these calculations on the back of a napkin or in my calculator. He put it as a little value here. I'm going to go back to him and say, hey, if I'm looking at liquidity, maybe I'll have a button up here that says look for liquidity. It'll highlight the ones that are liquid so that there's not even going to be a question. But the fact that he made it this simple for me so that I don't have to, interpret the data, but it'll just show up in like green lights. These are the ones to use. I'm pretty stoked. Anyway, the option that I would use as a substitute instead of shorting it would be this one right here. So check this out. He also made it so that I could look very quickly at what components of the options are intrinsic and extrinsic value. Good option substitutes have extrinsic value at around 5% or less. So this one, i- it's just on the margin of being a good trading at parity option. And then here's that liquidity number. I'm just going to have him whenever these numbers are in range, make the whole thing green so you can just look very quickly and know exactly which option to choose. I'm recommending the Bank of America July 2026 $65 put if you don't want to short the stock. But again, wait for the signal. And if in doubt, paper trade. I'll be in there doing what I'm doing.
Yeah, and the link to that tool once again is in the chat. Head on over there, click on free indicator suite, sign up, and you will be given instructions on how to access that. That's AJ's pick of the week, Bank of America, ticker symbol BAC. We've got a couple names from the lovely folks all around the country, some names that we've actually been looking at over the past couple of weeks. I believe they want an update, maybe a revised, analysis of where we are. We'll start off with Kelly out of San Francisco, California, interested in Bath and Body Works, ticker symbol BBWI, a name that AJ, I mean, it seems as if this one never makes it off the watch list.
Well, it should be off the watch list now. So I think I hinted that this was a late spring, all summer into the early autumn. We're kind of past early autumn now. This one has started just in the last 2 weeks to come down below our channel. Let me show you a year-long chart because we were trading this all summer and we've been pulling out a pretty fat income. I think my overall trade on Bath and Body Works for the year produced something like 85% ROI for being in it since last spring. So that's fantastic, seeing as how I only did about, 6 adjustments over that many months. So I only went in there and did little tweaks, added a little, premium selling trade here, rolled out of a protective trade here. It wasn't like I was day trading this thing or anything. So talk about a money maker. But as you can see, if I throw in some support and resistance lines of what we were using, we loitered around our support line for a hot minute there, about just under a month, and now it's starting to dip down, which means, and I was trading this from both sides, meaning I had an initial covering position from the top that was a deep in the money, far out in time put option, and I also had down at the bottom a deep in the money, far out in time call option, and I was adjusting both sides of these equations about once a month. So as far as now that it's moving down, my position from the bottom, the deep in the money, far out in time call option, that call option has been stopped out, and now I've got a protective put that's going, profiting big time right now. So my trade basically auto adjusted into a directional position where the put is profiting. And then from the top side, that initial covering position is profiting unfettered right now because it also is a put. So I've got 2 puts in place here. This position auto adjusted. But as far as starting a new position, no. This is the end of this position. Now you're just cashing out those last transactions when we actually get a bottom signal. It's giving me a hint that a bottom signal is going to come at the end of today, and we should look for an exit on Monday, Tuesday, Wednesday. Remember, the signals come end of day, even though the arrow is on right now and it's the afternoon. Signals come end of day, and then we look for follow through the subsequent days. So we'll see if this is the end of this. As far as starting a new trade, we need to make sure that we understand, we have to let this new level of support, this new level of resistance mature. We want to know what our new boundaries are before we start trading premium again. But this has been an amazing run for sure.
Yeah, I imagine a couple of names having, as we close out the year, having a similar setup where we're finally breaking through this support level. And although there is a signal forming, you're using that as a identifier to get out of the position, not necessarily put on a new position. So
no, if you want to start putting on new positions, like I said a few minutes ago, look at the banking sector.
All right, BBWI. Thank you for that, Kelly. Moving on to our second name, Michelle out of Austin, Texas, wants to know what's going on in the gas and oil sector with a look at Schlumberger, ticker symbol SLB, a name that I believe we covered a few times already.
Yeah. Just look at the pattern, SIP, for the last year. When you see this and this sideways pattern like this, even when you go to like some of the top green lines like we have in the last 2 weeks, but when you see something trading between your support and resistance for, this looks like 1, 2, 3, 4, 5, 6, 7, 8 months, that means that you've been making income letting the timer go by, because that's how these option strategies work. When something is in a range bound sideways channel, you turn the timer on every month, and every month you get paid double-digit returns, right? So we're up at the top here. I'm going to zoom in a little bit on this price action. We're up at the top here. We're waiting for a solid signal. So check this out. We got a signal, and then we did not get follow through. And by the end of the next day, when we were looking for follow through, it said, stop looking for the signal. Cool. Then the next day, we got another signal saying, okay, start again. So each subsequent day, we tried to look for that follow through, and when I say tried to look for the follow through, this is a passive thing. At the end of every day, you put a conditional or a contingent trade on, and then you come back the next day and say, did the trade fill? Yes or no. If it's no, do I put it on again? So no. And then I got this light blue signal that said, okay, take a break. It doesn't look like that was a real signal, only for it to come back again and say, okay, start tomorrow. So we tried to fill it yesterday. We're trying to fill it today with a shorted position. None of those. By the way, welcome, Michelle. I know you just joined our show. In fact, Michelle was on our workshop yesterday. Michelle was recommending that we look at this yesterday. We looked at it very quickly during our workshop, but we wound up focusing for the rest of the workshop on a different ticker symbol, which is why I think, Michelle, you're bringing this up during this show here. Listen, Michelle, the scoop is we got our signal on Wednesday evening. We tried to get the follow through. We put a conditional trade in place in order to short this yesterday. It didn't come, by the end of the day yesterday, we went and looked and our position hadn't filled. I've got that position again. I'm going to keep putting that trade on, that conditional trade. And if it gets follow through one of these afternoons, I'll come back after the market's closed and I'll see that the trade went through. Or if one of these afternoons I come back and yet again get another light blue arrow, that means don't try to trade this anymore till I get another magenta arrow. So that's where I'm at. What I'm trying to do right now is either be shorting Schlumberger at lots of 100, or I could be using a substitute option. And we have a minute here, so let me go ahead and use this new tool of our developers and see what's up.
Which, by the way,
SLB.
there's a question on that. I don't know if you want to, while you're doing this, answer that. But is the percentage liquidity parameter changeable on the screen by the user? Is the question.
Ooh, that's a good question. So hard coded in, and maybe this is something I can give the developer for feedback. Maybe have like a gear with a settings so that you can change what those thresholds. Right now, it's hard coded based on what I teach. So the number is if that normalized bid ask spread is less than 10%. It's liquid. If it's greater than 10%, it's illiquid. But maybe that's a great idea that I have a little settings, one of those gear icons, and I can switch those thresholds. Thank you. Thanks, you for that. That's some live feedback. Okay, so looking for a substitute put option. I like to go about 8 months out, so that puts me into July. I don't know why people are calling me and why I didn't put my phone on mute and why it's even in this room with me. I apologize that we're live. I like to go about 8 months out. I like to go deep in the money, enough so that percentage of extrinsic value is 5% or less. And maybe that has to be in the gear icon too. Maybe you can change your thresholds. That's a great idea, man. Thank you so much. I should call him and if you want to send us not public on YouTube, but send us a private message and I'll give you a call. Maybe I can give you a free month or something of our program. 3.1%, or just call in. If you go to our website, there's a 1-800 number and there's a local number, 970 number at the bottom. Just call in and say, hey, AJ was on the AJ Brown show and said I should get a prize. We'll make sure we set you up, dude. That's great feedback. 3.1%, 3%, 11.4. There's my threshold. So I want to go here, and then I want this number to be less than 10%. It's not. The one that's less than 10% is up here, and this jumped up. So you're going to have to compromise, right? I would compromise with liquidity over extrinsic value unless the extrinsic value goes through the roof. But even though my threshold is 5%, I can actually feel comfortable with an 11.4%. I'm looking at this Schlumberger July $45 put. You also have to look at when the July option started to trade. Maybe that July option just recently opened its doors to having trading on it. Maybe you compromise and you go with a June option, not quite 8 months out, but far enough for yours. So it all is about, finding that best option. It's not something right now that an AI can do. You've got to weigh your personal, what would I compromise on? But I could see possibly using this $45 put that expires next July as my substitute option to shorting that stock. So, Michelle, that's where I'm at.
All right, Michelle, Schlumberger, ticker symbol SLB, and our final name in today's speed round as we head into the holiday season. Lucy out of Portland, Maine wants to know, Mattel, ticker symbol MAT. Are we going to see an uptick heading into the holiday? Are people going to spend more money on toys? Can we make an investment in Mattel, the stock? AJ, what are you seeing from your end?
Well, I'm going to take a step back and give Lucy some. So we like to say we teach people about 10 tests to determine if something, if a symbol, whether it be a stock, an ETF, or an index, is a good symbol to be doing this premium selling on, creating an income trade on, right? And so I am going to actually look at some of these fractal patterns. This is a 2-year chart. I actually want to look at the 2-year weekly chart, and you'll notice over the last 2 years, most of the trading has happened between about $16 and $20. You know, at one point it went up to 22. At one point it went down to 14.50, but for the most part, in 16 to 20, 16 to 20 bucks. Mattel is one of those symbols, and if you look at the archive of our show, we have featured Mattel before. It's a great premium trade. In fact, let's go back just for laughs and giggles and look at the fractal pattern of a 10-year monthly chart. Now I'm looking at 10 years of Mattel trading, and since 2020, that's like 6 years. 6 years, Mattel has been trading, you guessed it, between $16 and no more than about $22. So Mattel should be on your watch list. And thank you, Lucy, for bringing our attention to Mattel, because you could be trading premium on Mattel on and off, you know, for years. So I'm back into a 6-month daily chart. Right now, Mattel has been creeping up. We had earnings back on, let me go ahead and switch my drawing tool here. We had earnings back on October 21st. We're coming up to that level at $20 that I've been talking about. We've gotten a couple of top signals without getting the follow through. You know, it's all about end of day and then next day follow, or I should say subsequent day. It doesn't always happen on the specifically next day. Subsequent day follow through. It looks like they told us, hey, maybe we're at a top. Screw it. There might be a better top. Hey, maybe we're at a top. 2 days later, screw it. It may go higher. So I'm waiting for my next purple signal. When I get my next purple signal, I'm going to start that, you know, conditional trading for a top. The idea here is, again, short Mattel, and you got to watch out, right? You might want to look at what happened with Mattel last winter and the winter before. Is there a pattern? Does Mattel tend to go up in price leading into the holidays? Because that can help guide you. You know, is there seasonality with Mattel? But, you know, just looking right now at just the technicals of this particular 6-month chart, I'd be looking for a top to short Mattel. And I could look for a substitute option using our options lookup tool. But that's where I'd be. But I want you, before you just trust this 6-month chart, I want you to go look for seasonality, because Mattel is one of those companies. And remember, there's all this tariff stuff on toys, and Trump has famously said, hey, maybe you only need 1 or 2 instead of 5 or 6 toys this year for your kids, which I think a lot of people took as an affront. They're like, you really want me to diss my kids? My kids run my household. I know that for sure, because I got a 4-year-old that is a little commandant. So I know exactly what's going down there. So there's not going to be any shortage of toy purchases this year, no matter how much tariffs you put on it. We as a family, we'd starve first before we, you know, disappoint our little one.
Well, at 4 years old, that's prime time toy demographic. And what's interesting about Mattel is they're not just a toy manufacturer anymore. Like Barbie, the movie, was one of their big products as well. So they've kind of, you know, rolled into some of these other verticals. The one thing that I'm thinking of as we're discussing this Mattel is Toys R Us making a comeback. I don't know if you saw that.
I've heard.
But there's a couple of them that are
Toys R Us kid.
I was always a fan of Toys R Us. So when they went bankrupt, I was a little sad. But for them to be making a comeback, you know, I think Mattel
Storefronts or online?
Storefronts.
Shut
yeah.
up.
Yeah. I'll find
Jeffrey
the article.
Giraffe?
I had no idea, but I'll
I
get
don't
some
wanna
data.
grow
But
up.
I'm seeing
I'm a
that
Toys R Us kid.
because all the Black Friday sales have pretty much started early this year.
Yeah.
I
It's
don't know
not
if you
the la-
noticed that.
It's earlier. It's supposed to be the Friday after Thanksgiving, but Thanksgiving's a few weeks away, and already everybody's trying to beat each other.
Hey, I started running things for clients at Monday this week. Monday, they've already started running their Black
Do
Friday
you
sales.
remember on Thanksgiving, people would all of a sudden after dinner, like, be like, "I gotta go to the store," when they
Yeah,
open their
run to
doors
Walmart or Best
midnight,
Buy and
or
squeeze
Toys R
in.
Us.
Yeah,
I remember Toys R Us did the Cabbage Patch thing in the '80s, and man, there were like fights at 1 a.m. in the morning. Give me that doll. I gotta get that for my kid. He wants a Yeah. Don't tell parents that you're gonna only need to get 2 presents this day. That's a boo-boo. Come on, that's being out of touch.
All right. As we end today's show, this was a tweet that I saw that AJ, let's go ahead and get your final, input heading into the week, heading into, the thick of the holiday season. Nancy Pelosi announces her retirement. Warren Buffett says he'll no longer write for the Berkshire annual letter. Michael Burry announces the closure of the fund. The White House says last month's job report will likely never be released. Bitcoin falls below 100,000. Verizon cuts 15,000 jobs. Kalshi forecasts a 30% chance of a recession next year. To close the show out, what are your final thoughts? What are we looking at? What do you make of all that?
I'm going to be a little controversial, but I think it's time that old people get out of the way.
Hey, all right then. With that,
And I'm old. I'm 52.
yeah, you're not
but
old yet,
I think a lot of these people, Warren Buffett, but time to move on. Let
Nancy-
some young people. Nancy, I loved you, man. 40 years. Get out of the way.
Greatest trader on Wall Street.
There's like indicators. What's Nancy trading today?
All right, folks, we truly appreciate it. Once again, as always, AJ's quick links are available. Head on over there, show some love, hit that like, hit that follow, hit that subscribe button on your favorite social media channel. Get access to that free indicator suite. As you can see, AJ and the development team are making great progress this week, more so than in the past. I mean, they're really cranking the notch up. We appreciate the feedback. We're going to take it back. If you got more ideas, feel free to drop a note. Take a look at the free workshop if you're curious about getting involved in premium selling. We've got custom coaching for some of you guys that need that one-on-one hand-holding. And then the trading trainer community is growing actively every week. So if you're not in there providing some input, head on over there. The links to that is in the chat. As always, appreciate everybody tuning in. AJ, we appreciate you taking some time to show your lovely fans all around the world, some love back in terms of what you're seeing and some opportunities. With that, we'll catch everybody. Have a good weekend. Stay safe. If you have any questions, feel free to throw it in the DM. Head on over to trainingtrainer.com. AJ said there's a toll-free number as well. Feel free to give that a call if you need a little bit more input. Otherwise, we'll catch you guys next week.
That's good.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.